And a quick check on the agri space now, where the chana futures have declined for a second straight session in a row after the regulator imposed a 20% special deposit margin on the long positions. That has triggered a sell-off after a rally to record highs. There you can see nearly 3.5% of a decline coming in for chana. 4,065 is how the contract is traded. In the spices, turmeric futures touched their daily permissible upper limit of 4% on strong buying, supported by decline in the daily spot supplies and expectations of a further rise in prices. Pepper prices also rose on dwindling supplies due to lower output, while the jeera futures, they declined on profit-taking. Let's take a look at the cardamom prices also, because those also have seen a bit of a choppiness today. We saw the prices gain up to nearly upper circuit as the market opened, but at the closing, just 1.5% of gains in how that commodity is trading at this point in time. Let's also get the sugar prices on your screens, because those have been the gainers today, closing the week on a positive note. And we have seen the Indian sugar prices gain up today due to good summer season demand, and the government's decision, of course, to allow unrestricted exports has lifted the sentiment in the Indian markets. Mr. Bose, how would you look at the sugar prices? Because the policy has been favorable. What kind of a support are you expecting?
Well, I can't give you the numbers as Mr. Verma can from ISMA. But I would tell you this is a very positive move for the sugar industry, very proactive move by the government to export for India to be active in the sugar industry, in the international trade in sugar. It usually leads to bearish price movements in London and in New York. But I will also tell you one thing, that while the combination of summer demand, as you all both discussed, combination of summer demand and exports is bullish for sugar prices locally. At the same time, the crop is coming in October, November. I don't know what is the exact size of the crop, but after, say, the festival demand, post-Diwali, post-Dussehra, post-Durga Puja, sugar tends to be under pressure. So this could be a seasonal spike, especially given that international prices are pretty weak as well.
Mr. Bose, a word on chana as well. Of course, the decline has come in as expected after the margins was increased, but the fundamentals are strong. What levels do you think could work out there?
I think you summed it up. The fundamentals are strong, and the marketplace has shown a certain amount of price elasticity to accept a 4,000 rupees wholesale price, Manisha. So if I talk to the pulses traders, they're talking of 5,000. But at the same time, I'm not surprised that the regulator has increased the margining. The exchange should have done it earlier, I suspect. And you see, ultimately in agro-commodities, Manisha, as you will know from your past experience, people in the physical trade, they don't buy premiums. They buy discounts, they sell premiums. And if chana prices at 4,000 rupees are reflecting a premium, then the physical market will sell it off. They will give delivery, or they will back away from buying. At the same time, if it's reflecting a discount to them, and they do feel the prices are headed towards 4,500 or 5,000, they will continue to buy and support the price. But the exchange's move is a good move, and it shouldn't be seen as a dampener. It should also be seen that now real solid players will be involved in the futures market, and the price discovery mechanism will be that much more tighter. So I think this looks good fundamentally, and as well also in terms of the futures exchange handling of it.
Valid point, Mr. Bose. Thank you so much for joining us with your sense on all of those commodities today.